The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. My name is Darrell Martin. I'm your host for the show today, and let's check out where the markets are at right now. We got the S&P is flat, up a point. We got the Russell's up $10 right now. Nasdaq currently up 3.5. Dow's up a mere 16 points. Copper right now is basically flat on the day. Gold is it's moving a little bit. It's down about 13 points, down 1% right now. We got silver is down 666 ticks there, so 3%. Looking over at natural gas, it is down almost 3% on the day. We got oil up 81 cents, almost a 1% move. We got corn pretty flat up, just a few ticks, 0.75 right there. We got soybeans up $3.75. Eurodollar is down 74 pips. Aussie dollar is down 63. And pound dollar is down 40. Dollar franc right now, looking at that, it's up 48 pips. Dollar CAD up 49. Aussie yen up 38. Or actually, US yen up 38. Aussie yen down 43. Euro yen down 27. Pound yen is up 19 pips, with the euro pound down 14 pips. And that right there is your market wrap. Gets us caught up for the day. And just a reminder, you can listen to us on your mobile phone around the clock at TFNN.mobi, and 9 hours of live commentary a day at TFNN.com. Now, if you haven't checked out Nadex, I talk a lot about Nadex. If you haven't done it, now it's time to start checking it out. Flat markets, like we've been having the last couple days, volatile markets, like we had the last couple weeks, either one, you can hop in and profit on using the Nadex products. So you can do premium collection, or you can go for the trend moves. And or you can do both. You can do premium collection during trends. And but right here over on the right side, you'll see a Nadex banner. Make sure to hop on over to that. Click on Demo Trading Account, and you can set up that Demo Trading Account. And it's a fake paper money, so you can hop in there and get some good experience first. Put in your username, first name, last name, phone number, and email address that you want. Click Apply for Demo, and then they'll send you a password. When you click on Login for your demo account, they just updated this page. You'll just click on Demo Account, fill in your username and password, click Login. Now, to open a live account, it takes about 5 minutes to go from start to funded, and it's only a $100 minimum funding requirement. You don't have to worry about getting assigned anything, taking assignment on like calls or puts. You don't have to worry about making or taking delivery, last trade dates, weird stuff like that, like on futures, and you don't have to worry about margin calls, like on multiple option and stock strategies that you can do. So depending upon what the strategy is. And, of course, also margin calls on futures and Forex, obviously very, possible on those. And because everything has capped risk. And a couple other things for you. They are CFTC regulated. And that is the same regulatory body that oversees the CME. They're in Chicago. And, where oil and S&P and gold and all that are traded. And CME Group, which, owns NYMEX, COMEX, all that. And also the Globex. And then, let's see, what else? Fees. What about the fees? No broker commissions, so there are just exchange fees. Nadex is not trading against you. They are an exchange, just like CME is not trading against you. Okay, so there's market makers and traders on the other side of the trades. The fees themselves are 90 cents a contract per side, and it goes up to $9 an order. So if you do one contract, it's 9 cents. 5 contracts, it's $4.50. 10 contracts, it's $9. 100 contracts, it's $9. Which makes definitely a bigger and bigger impact on your cost basis as your position sizes grow. And there is no fee on settlement if a contract expires out of the money, so with no value in it. So entering, exiting, settling with value, all those have fees, and then of course often there's no exit settlement fee if you hold the expiration and it expires out of the money without any value. They are open from as early as 6 to as late as 6 p.m. to as late as 5 p.m. So basically up to 23 hours a day, depending upon what market that you're trading. And they have Forex markets. They got futures markets, and they have indices. On the indices, they got the S&P. You can go over here and actually check out the markets. They got so right here on the stock indices, we got the Dow, the S&P, the Nasdaq, and the Russell 2000. They also have the FTSE, the DAX, and the Nikkei. So 225 right there that you can trade. In addition to that, you can go over and look at the Forex pairs. They've added some Forex pairs. They got Euro dollar, Pound dollar, Dollar yen, Euro yen, Aussie dollar, Dollar CAD, Pound yen, US franc, Euro pound, and Aussie yen. So they cover quite a few pairs that you're able to trade, and you can even make synthetics. I've talked about that a little bit before. It's a little more complex, but that's something that we'll eventually get into more and more detail here on the show. And then on the commodity side, they got your metals, they got gold, silver, copper. On your energies, they got crude oil and natural gas. And on your ags, they got corn and soybeans. So you have plenty of variety, plenty of different markets. Some days some markets are moving and some markets aren't. So, Forex is sort of the bigger mover at the moment. But, your indices are, been pretty just flat. So, if you're looking for movement, Forex, you're looking for, flat to do premium collection, indices might be where you want to focus at right now. So let's see. Let's look at a couple things. Another thing is you can check out the scanner over here, bottom left side, right there. And you can get free access. Log into that and check it out. So try all that out. And let's go in and let's look at it and let's talk about, I've talked about this briefly, but we didn't get into a lot of detail. So this might be sort of the main topic. We'll see how long this takes, but the main topic to look at on the day, and that's what's called a synthetic currency. And like I said, I touched on it briefly, and had some people say, hey, can you go into that a little bit more? And basically how to make other FX pairs. Because there's a lot of FX combinations that you could actually create on Nadex, even if you don't see the actual FX pair itself. And let me show you what those combinations could be. Give me 1 second. I'm going to open up a few different things. And then I'll bring them all up here for you. There we go. Okay. So if I log into the scanner, let me show you what all the combinations are. Over here on the deviation levels, which we post every day at 8:30 for the next day, which are basically, you call them pivots or support resistance levels, and which are extremely insanely accurate. But if we go on down here, and these are all the combinations you can make out of the Nadex pairs. So we have 21 total FX pairs. Even though they only list 10, there's actually 21 FX pairs you can trade. And so if you want to trade CAD franc or pound Aussie or whatever, pound franc or something like that, you could do it even though you may not see it directly inside the Nadex platform. And you go over here and we look at the spreads, and notice that there's only so many currency pairs. And so for instance, like they have Aussie yen on the binaries and Euro pound on the binaries, but they don't have them yet on the spreads. Okay? But you can still make the Aussie yen on the spreads. And so I want to show you how to do that and how that works. So let's bring up, first I got to do a little math for you. And that's the wrong, I don't need that. There we go. Okay, so right here, I don't know why that's opening up way up there, but we can always move it down. And what we'll do is move this. There we go. Okay. And I'm going to go in and I'm going to pull up a Thinkorswim to help out with this example. And let me see here. Go in, I'm going to pull up really simple, just, I'm going to throw some 5-minute charts up there. Nothing that fancy about them. And we'll just put Aussie dollar, dollar yen, and Aussie yen. Okay? And what I want to do is I want to look at the actual price of each one, and then show you the basic math of how you make a synthetic currency. How is Euro yen priced? Okay, so they have Euro yen. Why don't they have Aussie yen? And if they don't, can I have it anyway? And the answer is yes. And there's some pretty cool advantages that you might even like, in some ways, trading this better than trading the direct, what's called the synthetic euro, or the natural euro yen versus synthetic euro yen. But we're going to go into Aussie yen as a focus at the moment. And so right now we got the Aussie quoting at 0.8951. We got the US yen quoting at 102.56. And we have the Aussie yen quoting at 91.80. Okay? And so to take you back, like this is what I went over before, to old school, A over B, times B over C equals A over C. And that's because your B's will cross out, okay? So if we go right here, if you do A over B times B over C, B crosses out. And it basically neutralizes it. So that's why your result is A over C. So if you would have went in and said A over B times B over C equals A over B in high school, then you would have got a little red mark on your paper. If you can actually find that A over B times B over C equals A over B or whatever, now then you would have what's called arbitrage, and you get paid for it. And arbitrage is where the markets are mispriced and you take advantage of it. All right, so if we understand that basic formula right there, so I'll just keep that up there for us. And then we'll go over here, and what I want to do is make it just a sort of a format. There we go. And that way we'll copy this. Put that there in the center. It equals here. We're going to put that there, right there in the center. And so now we're going to take this exact same formula, and except for what we're going to do now is we'll do our A over B, which is going to be our Aussie USD, okay, times USD yen should equal Aussie yen. So does it? Well, let's see. So let's put the Aussie dollars price in there. Let's put the dollar yen's price in there. And let's multiply them. And look at that, 91.8. Okay, so they equal. They should equal. That's how the math formula works. That's how you get Aussie yen, Euro yen, whatever. So when I come back after this break, we're going to talk about what does that mean regarding Nadex and how you could create one of the other 11 possible combinations on Nadex if you want to trade different currency pairs. Or maybe you're already trading different currency pairs, but they're not on Nadex and you want to trade them. What does that mean to you? How can you use it? There. We'll be back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. Okay, so what we're doing is we're going through and we're just talking about how to make a synthetic currency. I mean, you can do this on FX, obviously, anywhere, but also how to do it just on Nadex in general, okay? And what we're talking about is, like, let's say you want to trade the Aussie yen. They have the Aussie yen right now on the binaries. They don't have it on the spreads yet, but you want to be a directional trader. You want to trade market trade in Forex, but you also want to have that benefit of capped risk. And so you can go in and you can combine these trades. There's a lot of different ways to combine them, okay? But either way, you want to, have obviously a capped risk on either side of the trade, however you decide to do it. So what we're talking about is how to put the two pieces together. And what we're looking at is actually combining two different spreads, okay? So these are, like, let's say you wanted to go short. As just an example. Now I could look at longs or shorts or whatever. But just as an example, say you wanted to go short. And let's see here if I have Aussie. There we go. So I'll pull that chart up. We'll look at it here in a second. But we need to combine two spreads. Okay, we need to go the same direction on them. Okay, so because remember on our formula here, now sometimes you go opposite direction. So you got to sort of know that A over B times B over C, you need it to equal. So notice how it was like Aussie dollar over dollar yen if you went in and you did something differently, let's say you did, dollar CAD, dollar yen, then it's a little different formula. You got to divide versus multiply. So if the dollars are on the same side, you got to divide because that turns it upside down. But anyway, but just to keep it simple right now, just focusing on the dollar pairs. And let's say you're looking at a short. If I'm looking over here at this chart right here, I got a potential short setup coming in on the Aussie yen. It's just been oscillating really, but it looks like it might start moving on back down. I got to wait for it to break below this trigger price down here of 91.69. But I want to take that trade. So how can I do it? What's the best way for me to potentially take advantage of it? So what I did again was I took 2 low risk spreads. Okay, so I took this one right here, the 88.60 by 89.60 at 3 o'clock, and has a $15 risk on it. It's only a few ticks away from break even right there. It's a few ticks of premium. And on the dollar yen, I took the 101.60 to 102.60 spread, and about $8 of risk on that trade, and about 4 ticks away now from break even. Okay, so basically, decent low risk trade. You're talking about trading. This would be like trading 10,000 units of currency on the Aussie yen, and only have to put up $25. Okay, so basically the equivalent of a mini lot. And if you were going to do a mini lot on the Aussie yen with a 50-to-1 margin or leverage or whatever, you'd be looking at about $180 margin. So a lot better, more effective leverage. And again, it's working in your favor because it can't go against you more than the max risk. And so we can look at this and basically how does this work? Like, what's the dynamic? What makes the price change? And it's sort of important to understand that, okay? Because when you're looking at Aussie yen and you're looking at dollar yen and all that stuff, it's like, okay, well, what makes one thing go up and one thing go down? And it helps. We'll equalize the charts over here a little bit, so that way they'll be a little more lined up for us. Okay, and so we're looking at the 3 charts. These are just little things I've learned along the way that if you were to look at the right stuff, it makes obviously a lot more sense. And then let's bring this one all the way over here. All right, so we'll line that one up like right at 11. We'll go back on this one. We'll line it up at 11. Take this one from 11 to basically now, and we'll back this one up a little bit more, and again 11 to right now. So now our charts are basically all the same. They're all 5-minute bars. I think one of them's open, I will close, but that doesn't really matter. What makes the Aussie yen move? Well, either the Aussie goes up faster than the dollar yen goes up, okay? So there's all these different combinations because you're doing what's called a spread. Okay, it's you do this a lot of times. This happens in futures, like people buy one month and sell the next month. Sort of the same thing in FX, and it sort of messes people up in their head because they're trying to figure out how this works. If they're they're new to Forex or new to future spreads or anything like that. And so you can see the Aussie yen now. If it goes down faster than the US yen goes up, then the Aussie yen will go down. All right, so stay right there. We'll come back. We'll make sure you understand what makes the Aussie yen move and why this is such a cool way to potentially trade synthetic currencies. Stay right there.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And, okay, so we're looking at Aussie yen. And what makes the Aussie yen go up when you're looking at Aussie dollar, dollar yen? Well, if the Aussie dollar and dollar yen both rose, the price could rise, okay? If the Aussie dollar went up faster, because you're long Aussie, technically short yen, okay? So if the Aussie dollar went up faster than the U.S. yen went up, then it would go up. If the Aussie dollar went up and the U.S. yen stayed flat, the Aussie would go up. If the Aussie dollar went up and the U.S. yen went down, it would go up. What would make it go down? It's the exact opposite thing, okay? If the U.S. yen went down faster than the Aussie dollar went down, or stayed flat, or went up, the Aussie yen would go down, okay? And so why do you care? How does that matter to you, okay? Well, if we look over here, and we can pull up current market pricing and all that, but just as an example, you can go in and you can sell this spread. Okay, so if we sold this spread right here, let's see, what would be our risk on this trade? So we got, when you're selling, it's always going to be the price you get in minus the ceiling will show your risk. Okay, and let's see, so USM, we can move our decimals over. There we go. And trying to get this thing to format correctly. just helps whenever you have all the formatting correct, because you have the different decimal places happening on the different currency pairs. And that will do it. There we go. Okay. And so right here, there's going to be $8 risk. Okay, because every tick on Nadex, it doesn't matter what the currency is, what it's based in, every tick or pip on Nadex is worth $1. You got $15 risk on this trade. You have a combined net risk, of $23 on the trade to control, like I said, 10,000 units of the Aussie yen. And so by actually combining these two floors and ceilings, you basically make a synthetic spread over here. And just formatting the cells again to do the same thing. We'll go down to number, and then there we go. And basically it's a 91.93 with a floor of 90.02 on the Aussie yen. That's pretty much what you're creating. So if you think about where the market's at right now, we have about 23 ticks of risk, which is 91, about 23 ticks higher than where we are now. So that makes sense. That actually lines up. Having 23 ticks of risk if our ceiling's going to be up here at right around 91.93. So it's actually even a little better because the market's at 91.77 at the moment. Now I'd have to update my pricing so we get this a little bit more. So let's get live pricing on this. And we got the Aussie yen is currently at 89.49. Okay, so 0.8949. And we have the US yen is currently at 102.51 on the sell side. All right, so this actually is a better spread. Look at this. If the market's currently at 91.78, okay, so this is actually, underlying Aussie yen. If the market is currently trading at that price, and my risk is $23, so we'll do that plus 0.23. That actually puts my ceiling at 92.01. Is that right? So yeah. So right there, whereas this gives me a ceiling of 91.93. Okay. So the cool benefit about this is basically I'm getting a lower ceiling, and that's beneficial. In a lot of different ways. We can go through all the complex math, but you're getting really just an ideal ceiling by that happening. And the Aussie yen could basically go up to 91.93, and you could, still, like, you actually have some extra cushion there. You have 8 pips of cushion that normally you wouldn't have if you just did the outright. Okay, so we have $23 of risk. Now, if the Aussie dollar goes down, but the dollar yen goes up, okay, that would technically, here's what would happen. If the Aussie dollar is dropping, okay, and the dollar yen is rising. So does that happen? Well, yeah, let's just look over here at the chart. Aussie dollar was dropping, dollar yen was rising, okay? So between these different time frames. So you can go and you can just look at our, maybe here's a better time frame. Like between 12 and 1, 12 and 1, 12 and, when it came back down. See how the Aussie yen came back down over here because the Aussie actually kept falling? And at first it rose up because the dollar yen was rising, and then all of a sudden the Aussie just started getting hammered and just really, really pushing down hard a little bit later. And when it really pushed down hard, it dragged the Aussie yen down with it. So why am I bringing all that up? Well, let's say over here maybe this is the best way to put it. Let's say from 1230 we got like 0.8963. Okay, and then we'll just say it drops down to 0.8944, and it did that. I don't want to sort of match up the times here. So let's do right here 1235. Okay, so we'll go here to 1235. We got a close of right there about 102.57. And we got to move down here. I mean, currently, let's see, we took a low here. Our little temp check there was 13.15. So if we go here to 13.15, we're going to close about 102.54. Okay. So let's look at what this would have meant. This means right here that the Aussie yen made 19 pips, okay, in its drop. The dollar yen right there made about 3 pips in its drop. And the Aussie yen itself moved from 91.93 down to 91.71. That's pretty much what we should see over here. Yep, see 91.71. Okay, so perfect. All the math is winding up. But what's really cool is, what if the US yen just really went up? And this is where it gets really, really powerful. If you grab this concept, and that's a little bit advanced, but if you grab the concept and the US yen just took off when one was falling and one was rising, they go in, okay, then the US yen stops losing. See, normally, let's say, just to play with some numbers, okay? Let's say the US yen goes from 91.93 or 102.57. Let's say it shot up to 102 to say 87. Okay, 30 pips. Not an unrealistic thing. Okay? Then, and you were short the Aussie yen. Okay, so if you were short the Aussie yen. So your Aussie dollar went down 19 pips, but your Aussie yen shot up 30 pips. Okay? Well, if that happened, let's say like right now, then you would lost on the Aussie yen if you're trading the Aussie yen or the Aussie yen synthetic, because what would happen is you'd be net down 7 ticks. Not a massive loss, but you'd be net down $7. Okay? Whereas over here on the Aussie dollar, you would have made 19 pips. Okay? So we have 15. We profited 19 pips on that drop down. But when the Aussie yen shot up, we had a capped risk of $8. So our net, and obviously you can multiply these numbers out. So I'm using very small, like single contract numbers. You could be doing 10, 20, 50, 100, whatever. Our net on the trade is $11. The reason is because the US yen went against us. We were wrong about the direction of the Aussie yen, but at least one of them went down more than the other one's at risk, and therefore we made profit. If I just would have been trading the Aussie yen, I would have lost money. If I would have been trading, if Nadex had the Aussie yen synthetic, I would have been wrong. I would have lost money. The Aussie yen went up. But since I had the spread on both of them, then I was actually able to be profitable on the trade. And you can go through, you can actually back test this. You can open up charts in Nadex on spreads after there's been a big move and chart it out. Like you can do this entire thing all over again over on euro dollar, US yen, euro yen. We got some big moves happening. And like we got a nice solid move right here. So this might be a good example. And from, I don't know, we'll pick like 755. And we're going to take it right down here to the low, just as an example, like the 10. Okay, so basically 755, 8 to 10. And we back up here. Let's measure this out. We'll do the same thing. So we'll take 755 to 10. And then over here, we'll do one more time. So we get all the currencies lining up. And we'll do 755 to 10. So right here. Okay. Now on this, what if you were short the euro yen? Well, you would have made money on both. Okay? Euro dollar and dollar yen. So how many ticks would you have made? So let's go, let's check this out. We got 8 o'clock. Okay, we're at basically 1.3729 on the euro. And then we'll go down here. We'll just take the close of 10 a.m. So we got 1.3677. I think it's actually the open, the way that Thinkorswim plots it, but that's okay. As long as we're consistent in what we're looking at here. 8 o'clock, we got basically a close of like 102.37 on the US yen. And again, go over here to 10 o'clock, and we'll go to the close on that, which is up here at 102.17. And then let's see, where's the actual Aussie yen, just for a comparison purpose here in a second. We'll go over to the 8 o'clock. Move back one more bar. Right there. Okay, so we got the 8 o'clock. We have 140.54. And for our 10 o'clock close over here, we got 139.74. Okay, so let's pull this up, look at it. Okay, well, what would all of our, what would our net have been? How does it all work out? So you made 52 pips there, you made 20 pips there, and you made 80 pips there by doing the combination thereof of both of them. And then let's see, what would happen if we do the multiplier? 80 pips. So by combining the two, you actually made 80 pips on the trade. And but I mean that's a cool scenario. But the best scenario in my mind is whenever one goes the other direction. I mean, obviously both go in the same direction. That's fantastic. But when they go in opposite opposing directions. So that's really the sort of the best scenario that when you can find that happens, because you're able to really take advantage of the fact that you have a capped risk on one side of the currency. So if you go short both currencies, which would be just like going short euro yen, or if you went long both currencies, which would be like going long euro yen. Now if both go down, you'd lose. Okay, just like you'd lose on buying euro yen, or if both go up, you'd lose, just like you'd lose on selling euro yen. But you have capped risk, so you may not get stopped out. The biggest benefit though is, again, if one of them goes up, or if both of them go up, of course you make more money. But if one of them goes up and one of them goes down, you actually can net a profit. And that really is the number one benefit of making a synthetic over using the natural cross currency pair, because the natural cross currency doesn't have that exact same benefit with the capped risk necessarily built into it. And now you may have a capped risk. Maybe you can find a Aussie yen with $23 risk, and so you go, well, I could just find one with $23 risk on it. But the problem is, again, look at this. Aussie yen lost. Okay, Aussie yen on this example that we gave right here, the Aussie yen itself would have lost money. Right there, 70 or 7 pips. Okay. I'll just grab that, format it, and bring it over here. So by going in and selling the Aussie yen and selling the US yen, and then also the US yen flies up 30 pips, the Aussie dollar drops down 19 pips. If you were short Aussie yen, you lost. But if you were short Aussie dollar spread and short US yen spread, due to the capped risk of the spread being $8, then you profit $19 here, you lose $8 on the other side, you net an $11 or a $110 or an $1,110, profit. So it's a pretty sweet way to combine it. You could actually be wrong and still make money. You could watch that Aussie yen chart go up, but you could actually still be profitable because you have a capped risk on one of the two sides of the synthetic FX. All right, stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Folks, welcome on back here to the Diagnostic Trading Hour. And so just doing that wrap-up again on, talking about synthetic currencies. You can even do these on synthetics that they have. You can do these on euro yen and on pound yen. So what's the downside? The downside is you are going to be adding a little bit to your bid-ask spread. Okay? The downside is you're adding another fee. So there is a reality of that additional expense. You may be adding anywhere between, at least 2 to, say, like $7 to the trade. Okay? Now, that's if you get in and get out as before expiration. So, just sort of, think about that. That does add an expense, but it also has a value-added benefit. And I just wanted to open your mind to it, to see it. And what's really cool is if you do this, if you learn this, then you could even do straddles on this. Okay? You could go in and you could buy an Aussie dollar and buy a US yen, sell an Aussie dollar and sell a US yen. And that would be an Aussie yen straddle. So maybe a currency pair that's more volatile in Aussie yen, maybe like an Aussie announcement might be more volatile in Aussie yen. This would allow you to do the spreads using it. And there could be some pretty cool benefits because remember how I talked about a whole, you're capped on one side? Well, you'd sort of be doing a double straddle. It'd be like doing an Aussie dollar straddle and a dollar yen straddle. But let's say Aussie dollar flies down, then of course the Aussie dollar you bought to head to the other one does lose, but but US yen flies up. then you actually could get profit on both sides on those two different straddles. So if both fly down, you can still be profitable. So you could actually potentially increase your profit. And whereas if you just did an Aussie yen straddle, maybe it didn't move enough, but if you separated the two out, it actually could have moved more. It's something that's definitely something you play with, you demo. You don't just hop right into it, but it definitely should open up a few things for you and allow you to look at that. And this is more for, I'd say the number one reason I'm doing this is because I know we have some FX traders out there that trade some of the other FX pairs, and maybe they don't see them listed on Nadex, so they're like, hey, this is what I trade. I don't see that they have it. This is a way to still do it, still get advantage of that capped risk. And again, the list of those, right over here, we got Aussie dollar, Euro dollar, pound dollar, dollar yen, dollar franc, dollar CAD, and they also have other ones. They got Euro yen and pound yen naturals, okay, natural synthetics. But then they also have Aussie, like you can also make synthetically Aussie CAD, Aussie franc, Aussie yen, CAD franc, CAD yen, franc yen, Euro Aussie, Euro CAD, Euro franc, Euro pound, pound Aussie, pound CAD, and pound franc. So once they add New Zealand in there, then we'll have a whole nother list of 7, 8 more possible combinations. And so they keep adding and adding. But this is a way to do a spread. Maybe you're into future spreads. Buy S&P, sell NASDAQ, or whatever. So this would be a way to actually do that. Okay, with capped risk. So that way, if one flies up, it's capped off. And you just like trading the spreads between two different contracts. You can still do that. But this would, of course, be on a daily basis, intraday basis. But it is one way to, look at the markets and potentially take advantage of those differences. And, sometimes, one may go up, one may go down. Sometimes they'll go both directions. But in that case, you would have lost even if you're doing this in, like I said, the natural cross-currency. All right, let's do a quick market wrap and see where we're at right now as of the end of the hour. And put that right up there on the screen for you. We got the S&P is still flat. We got the Russell. It's been the one moving currency of the indice of the day, up about 10 points right now. All right, y'all have a great day. I'll see you tomorrow right here on the Diagnostic Trading Hour. Stay tuned. We have another great show coming up for you right after this.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.